Yeah, okay. Here we go. We're officially back. You know me, you know I am. Mr. Wall Street, Don Wick in this bitch, big guy himself. And we're here to talk about the deception in the market. I mean, it's actually a big misconception going around. I done been on the block for a minute. That's why they call me Mr. Wall Street. You know me on all streets. But I want to talk deep here. I want to talk to the trader in you because the average trader I talk to is talking about how their profits are as high as they are on MT4 or they fly high on MT5. Fuck out of here, my guy. Now, that's not going to fly. Talking about how they keep it 100, trading Nas 100, but it ain't 100. And SPX 500 is cold, it's ice. You want that 500 degrees, that fire? Yeah, it means you need to be trading SPX, period. That's it, dot. No 500, but SPX. See, there's a ticker in the equities industry, which gives you actual access to something regulated. And in the futures market, you can trade the underlying. You got an ETF, you got an index, you got a futures contract, you trade the index through a clearinghouse. That's my cup of tea. I don't know what you're drinking on or how you're getting there. But when you're trading where there's counterparty risk and your interests are not aligned with the counterparty, and better yet, you're playing on his home court, yeah, your food, your liquidity. You know how we say it, you either liquid or liquidity, right? So let me ask you something. You know what I mean? Really, let's get deep. All right. Hold on. Back up. Because a lot of you didn't get it. When you make 250, you take 250. It ain't make money, we take money. On Wall Street, if you don't know who the sucker is, then chances are you the sucker. Yeah, you're the liquid, you're the liquidity. So that means if you have a strategy that works and is very consistent and you're trading with a bucket shop that has a liquidity pool, you're eating off their plate. And if it's home court advantage, they have the advantage. And they're savages. That means they play around with the fill. They make their own rules. It's like being on home court with their refs and deflated balls. So let me ask you something. When you click buy, who's on the other side? Let me say that again out loud for those that didn't hear me in the back. When you click buy, who's on the other side? The market or your broker? Yeah, that's a mic drop moment for you, real quick. Because if you don't know the answer to that, you're not a trader. You're just inventory in the simulation. And that was just the intro. Yeah. Market forensics, episode 4. Let's go. So there's a conflict of interest when you're dealing with a risk desk. Okay. Here's what they don't teach you in the Trading View University. Here's what they don't teach you on baby pips. Yeah, baby. You're not going to get this from the geeks on YouTube. You know Charlene, the charlatan? And you're damn sure ain't going to get it from the broker's education. See, most retail traders aren't trading in the market. They're trading against their broker. That's not a conspiracy. That's rough, rugged, and raw. That's execution structure. Welcome to the A book, B book game, baby. Understand that there. I want you to digest it here. Your order, when you're in the A book, is typically routed directly to real exchanges. I'm talking the CMEs, the NYSCs, right? NASDAQ or OCC. And if it's not routed, then at the very least, the broker is hedging your trades. That means when you go long, because they're taking the other side, they're going to have to take out more risk and go along with you. But for those in the B book, the broker is on the other side. So your order goes to the broker's internal risk desk. Yep. So the broker becomes the counterparty. That's why I said there's counterparty risk. Your loss is their gain. Yeah, because you're playing in their game on their home court. So you're fair game. No clearinghouse to save you, no independent verification, and no external oversight. Just you and your opponent. You didn't even know who's on the other side. They don't beat the market. They just beat you. You become the food. So let me decode this for you, right? I want to make this. I want to talk to the trader in you, because for those traders that really feel it's real and they're getting a feel trading on the B book and don't even know where to look or even how to look to determine if it happens to be a legitimate spot price. If the spreads are fair. And for a lot of you, you're trading in prop accounts. So you're on a sim in a sim. Let me say that again. You're on a sim in a sim. That means you're trading on a sim account in a simulated environment. God damn, that double hurts. You're double fucked. So A-book brokers, they route the trades to the real market. In Forex, it's the interbank market. With futures, it's going to be a clearing exchange, futures commission merchant, a clearinghouse. And for equities, the same thing, a clearinghouse. Or again, they're hedging their risk by taking the other side, but also going with you in the same direction. But that incurs more risk on a risk desk that's trying to mitigate risk. B-book brokers? B-book brokers keep the trade in-house. It's called a bucket shop. They put it in the bucket. So again, they're the counterparty. So your loss is their car payment, their mortgage payment, or a down payment on the yacht. Yes, it's their paycheck. So this isn't a trading desk. Again, it's a casino. And they profit at every mouse click. You think you got a stop loss, baby? To stop the loss, to stop the bleeding, but you still blew the account up because they slipped you to high hell. Yeah. So again, the casino on Wall Street. That's exactly what it is. It's just inside your brokers. It's worse than Prize Picks and all that other shit they got out there. So hear me out. The profitable traders, they are a threat to the trading desk because it incurs more risk when a trader shows consistent profitability. Flags the desk. It's flagged by the desk. And at that point, you start noticing that you're not getting in when the trade happens to work on your favor and it's aligned with the trend. Yeah, you swing traders, the ones that have figured it out, avoided the noise with the manipulation and the spread. But for you scalpers, yeah, you scalpers, they love you. Oh, yeah. The unprofitable trader, the ones trading NAS 100 on the 5-minute. Even worse, your NAS 100 traders trying to go down to the 1-minute. You think US 30 might help you because it's 30 instead of 100. So you go down to the 1-minute, not realizing the spread rips you alive. So when the trader's consistently losing, the risk desk approves every order instantly. It's instant execution, no delays. Spreads are pretty tight to encourage you to take that losing trade. Leverage incentives, that 500 to 1 there. Yep. Oh, what about the bonus offer? When that trader loses predictably, you're green lit. You can get that instant funded account as long as you just retry. The guy loves to retry, but he's following Charlene, so he can't lose. Signals coming on a 1 minute trying to trade SPX 500. It's not SPX, it's SP Fiction 500. You're not trading SPX 500. You're trading the broker's simulation, crafted in a server warehouse by dudes who never left demo. Yeah, 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 ah, ah, ah. They got you chasing candles, not capital. And guess what? It's not spread, it's stealth tax. So every fill you get is a transaction fee for their yacht. You heard that, Charlene? These brokers don't need you to succeed, they need you to click. So understand, a book, yeah, you make profit. That's good. Direct market access. But if you're trading with a market maker, he's making the market, Charlene. Teach that on your next YouTube video where you're going over candlesticks. See, A book, it sends to the market. B book sends your account to zero. And if your fills improve when you lose, you're not being traded, you're being farmed. Fake depth of market, yeah. Fake volume, yeah. If you're not cleared by the exchange, you're not paying exchange fees to trade products. That means assets, instruments that are cleared through a clearinghouse. Then guess what? You're in the broker simulation. You're trading in the matrix. Yeah, that's for all of you on MT4 and MT5 thinking you're doing it live. But the only thing high is you, because your profits always draw down. And there goes that 10th prop challenge account that you've just blown up. Kaboom. All right now. So synthetic price discovery, yeah, that volume you see at the bottom of the chart, when you think you're trading smart money concepts, or you're trading the losers inside the inner circle of traders, I see losers. I see drawdowns all over the internet with your fake snapshots. Trading a simulation in a simulation. You think you're on a chart? You're inside a mathematical illusion. No exchange, no order book, no gold, just line of code. Just the broker simulation that mimics the market movement. And when you trade the news, you're food. Yeah. Say that again for those in the back. You think that you've got a trading hunch, but now you're today's lunch. Broker, the broker doesn't honor market execution when you're trading against them and they're the counterparty. You're not trading Goldman Sachs, you're trading KOTFX or Hugo's way. Why you think he called it his way? Hugo's way. That means your money goes to Hugo's account. Yeah, you're sparring a spreadsheet. It's ridiculous. It's ridiculous. I hear so many of you saying they're killing it on MT4, trading on the indices. The indices. What indice? You don't even know about the underlying instrument. So you're the instrument. You're the product. That fake volume doesn't even help you. That supply and demand you're looking at, that liquidity gap, yeah, that liquidity gap, the liquidity sweep, yeah. The stop hunt, what you're supposed to see that with a candle and some fake volume, fake depth of market. And we're not talking about the order list or the asset list, or shall we call it the currency pairs on the left of the MT4 terminal. Yeah, yeah. Synthetic liquidity. That's what that is. You just paid. You didn't see an invoice. Yeah. They told you it was commission-free trading. The fee is embedded in the price. You just never see the invoice, boys. Spread markup. It's the invisible tax. It's cool. It's good. It's good. But let's run the numbers. You enter at $100, but get filled at 175. Yeah, $100.75. That's about 75 cents per trade. Again, 100 trades, that's $75 stolen before your strategy even gets to grow some legs. You paid a fee, you just didn't get a receipt. They told you it was commission free. Yeah, your market feed. You're the liquidity. Yeah, and don't try and trade during news, you FOMC sniper. You jobs report torch. Yeah, your torch in flames. Yeah, flaming up that account. The spread widens up like a highway. Yeah. So that means even if the trade was successful, it goes all into the trading desk's pocket. Yeah. And now you're out of pocket. So they say just wait for the reversal. Just wait for the reversal. They'll fill you. They'll fill you. Don't worry, I'll get a fill. You ever click buy at the lower level? You found it in a good demand zone. It was sweetly sitting on the Fibonacci level. Yeah, that 50%. For those of you that want to get it sexy, you saw it and got it at the 618. Risk management was straight. But for them, they'll tell you to wait. Yeah, the fill, it's delayed. So guess who got played and filleted? And if it reverses on you, boom. Yeah, but you're not in. And if you did get in, they slipped you and patted you to hell. Yeah, that's sabotage baked into the funnel. And don't be in a prop challenge account. Just hit retry. Reset the video game. So forensic reality. Real brokers execute milliseconds. B-books execute even faster when it benefits them. Add that up and you got millions these brokers are making, and even worse, Charlene's making money off the affiliate partnership. So the broker's goal isn't your success. They're your counterparty, your opponent. So A-book traders, they're a threat. Consistent profitability equals a liability. Even if you profit and I take the trades with you, I'm having to take on more risk. So in that case, then I'm having to route the orders to the exchange. And then at that point, how can I profit if I'm charging no commissions? And I can't mess with the spread. If I'm sending it directly to the market, it can't be manipulated. But the B-book, it pays for that Lambo. It's the revenue stream. See. Real traders see level 2 data, real order book, real flow. Yeah. Real counterparties. We know how much on the bid and how much is on the ask. And we determine that by a delta. Oh, yeah. I'm not talking options delta. We're talking order book delta. But you, yeah, you. And I'm also talking to you, Charlene, the charlatan. You get candles. You get fake volume and a hope strategy. What you trading ICT? What you trading ICC? You know what I see? I see a huge drawdown. I see a consistent loser who's tired of losing. But until you can understand the lay of the land, until you can get the drawdown, right? The slowdown, by managing your risk, by understanding who's on the other side of your trade and why, you can't profit. No depth equals no edge. You're swinging blind in a dark room. And it's even worse because the blind's leading the blind while the dealer watches with night vision on his yacht. Yeah. So a lot of you had no idea about the A book, B book, simulated liquidity, engineered pricing. Still not sure who you're trading against? I dropped you a free red flag sheet. All right. Red flag audit sheet. It's going to tell you, how to audit these joker brokers. Remember I said it? They're called broker because they make you broker. And if you're trading with a B book market maker, he's making the market. So give you 10 questions, but the broker's legit or just another B book funnel dressed up like a prop firm, because that's what they've transitioned to these days. Ever since MetaTrader 4 yanked most of the licenses because of the predatory nature of the industry, they moved to a prop firm model. And if you add the numbers up, what most traders were funding their accounts to call themselves a trader trading on MT4 trading NAS 100 are paying roughly the same amount you're paying per retry. You're treating the market like a casino and it uses you as the liquidity. So you have to ask yourself, can you trade news? Can you hold overnight? Do they disclose where the trades are routed? If you answered no to any of these three questions, you're not in a market, you're in a simulation. You're in a trap. You're trading in the market matrix. So go ahead and download that red flag audit checklist. And remember to like and subscribe. We're on episode 4, all right? But we'll be moving along to episode 5. We keep it live, all right? Definitely make sure you check the broker, all right? If you're trading the B book, you're not trading. You're just performing and tap dancing like a monkey. If the broker profits more from your losses than your wins, you're not a trader. You're bait. You're food. Don't just pass the challenge. Audit the structure. Download the red flag audit sheet. Subscribe for more forensics breakdowns and join the community of winners, alert traders. You already know who it is. Mr. Wall Street, Big God, Don Wick signing out of this bitch.